and gentlemen, a very warm welcome to all of you on Market Today at Business Today Television. Today is Thursday, a beautiful morning in Delhi if you are with us. It's nice and cloudy and there is absolutely a nice nip in the air. How is the weather in the markets? It's equally good and is likely to get better. There are strong cues coming in from Wall Street. There are all indications in the market overseas that a rate cut in the US geography is on its way in September. We'll discuss this in a little bit later, but let's start as usual with our daily dose of the Nifty chart with you are so familiar with. Yesterday the index closed at 24,770. This was up 71 points. While it looks just a minuscule gain, but remember, gains are piling up. This was the fifth session in a row when the Nifty closed in positive territory, and we are now just shy of 230 points from the all-time high of 25,100 or so. Will the Nifty reach there today or tomorrow? Only time will tell, but the fact is that the direction of the market is very clear. So 1 percentage point, less than 1 percentage point away from an all-time high, and as I have pointed out, the cues that are coming in from overseas are very, very good. Let's look at them in some detail. So the Nifty, because of its weekly expiry, is likely to be flat to a consolidating range. Remember, in the past 5 trading sessions, the Nifty has added in excess of 700 points to its tally, which now stands at about 24,770. So a flat day that is expected as far as the Nifty itself is concerned. Now let's look at what are the cues that are coming in from Wall Street. In fact, a very strong and very positive close that happened on Wall Street as far as prices are concerned on the Dow Jones index, on the Nasdaq in particular. The rallies on Wall Street are now 8 and 7 days old. In fact, many indices have given a consistent uptrend, given the fact that there are now fairly strong indications that in the month of September the US Federal Reserve will cut interest rates to the tune of at least 25 basis points. That is what 67% of respondents feel, and at least 50 basis points that the remaining 33% feel. So all 100% are looking for a rate cut, and 67% are hoping for a 25 basis point rate cut, and 33% are hoping for a rate cut to the tune of a good 50 basis points. Now let us look at how that has impacted the dollar index. The dollar index, ladies and gentlemen, is at its lowest since 27th of December 2023. They move in opposite directions. If you have rate cuts coming in, the dollar index will become weak, and that's the reason why you see the dollar index at 101.24. This is the lowest since the late part of December 2023. Apart from that, there is a lot of weakness that is coming in crude oil prices. I'll request the PCR to fire the crude oil chart at $71.67 a barrel. This is the lowest since January 15. It is good news for domestic equities, especially OMC such as HPCL, BPCL and IOC. HP and BP are already at record highs, and therefore this is good news for us. So at a low of January 15, the crude oil is now trading at $71.67 a barrel, and what's more interesting, on July 5th the same commodity was at $84 a barrel. So a very nice slide that is coming in below all major DMAs, which is a very, very big relief for Indian equities. So with these two things in mind, that a rate cut is in the offing, therefore the Nasdaq is doing fantastically well. It closed at 17,918, 102 points higher. It is also impacting positively on domestic IT companies. So a lot of correlations are now coming into the fore. Lower crude oil prices mean strength for domestic oil marketing companies. Lower interest rate projections in the Wall Street also mean that the Reserve Bank of India will be sort of also have a freer hand in cutting rates. In fact, today evening you will see the RBI releasing its minutes for the policy meeting that had happened last week. So we'll keep an eye out on that one. How many people voted for a rate cut? How many held steady? This is what we are looking at. Now let us look at some other interesting data in the form of stocks that I'm looking at. Without doubt, Paytm and of course Zomato. The charts will come there in front of you. Paytm has decided to sell its entertainment ticketing business to Zomato for a fee of about 2,000 crore rupees. This is positive for both. As you know, Zomato is already trading at a record high, and it just might see this minor dip. But Zomato over the last 6, 8, 10 months has showed an ability to turn around businesses. Remember, it had purchased Blinkit. There was a lot of kerfuffle as far as markets were concerned. Analysts were angry, but Blinkit now is an integral part of Zomato and is doing extremely well. Similarly, the ticketing business for Paytm now changes hands. So you just might see a mild dip on Zomato's stock price. Remember the old Wall Street maximum: sell the buyer and buy the seller. So that's how it works, ladies and gentlemen, on stock markets. But remember, Zomato's history of turning around purchases and acquisitions is pretty strong. Keep an eye out on Zomato, as also Paytm. This is good news for Paytm as well, because it gets access to much needed cash. Remember, it's having a trying time on equity markets ever since it was listed. But from the bad days of 350, 330 rupees, the counter is now firmly above its 200-day DMA, and this injection of 2,000 crore rupees would be very welcome as far as Paytm is concerned. Let's now dig a little deeper into what else is most likely to happen. I'll again request the PCR to keep both the Nifty and the Bank Nifty in front of us as far as charts are concerned. There are a couple of points that need mentioning, and importantly, as far as the Nifty is concerned, it is now consolidating above its 21-day exponential moving average. That's a very big positive for bulls. As far as the Bank Nifty is concerned, it's still above the 50-day DMA, caught in a trap, but that is how it is. Let's look at the weekly expiry today as far as the Nifty is concerned. You see a very strong support as far as the charts are concerned at 24,700 and 24,600 as far as the Nifty is concerned. There is a lot of put writing that is happening at that level. You see the open interest PCR, which is the most critical point, at even Stevens about 1.1%. That's very good. And the India VIX itself was down 3.5% in trade yesterday at 13.33. So all put together, the picture is very positive for domestic markets, at least for the Nifty, to reclaim its all-time highs. What else is now moving in strength? When you look at the Bank Nifty, ladies and gentlemen, you see a very strong support at 50,500, and of course the round number 50,000. Remember, the index was at 50,685 yesterday. It went down to the extent of 117 points. Nothing to be worried about. In the 4-5 sessions before, when the Bank Nifty was in an uptrend, it had added 1150 points. Of that, 115 has been taken away. Nothing to be worried about. In terms of how the PCR stands for the Bank Nifty, it is still in favor of bulls, 0.9 compared with 1.1 as far as the Nifty is concerned. So keep these two indices in mind. The Nifty, ladies and gentlemen, is, like I had mentioned, above the 50-day and the 20-day EMA, as also the Bank Nifty is still above 50 but below 20. So keep these few characteristics in mind, and of course we are now waiting for our guests to join us. Very shortly, Mr. Devin Choksi, Managing Director at DR Choksi Financial Services, will be joining us, and I believe Sakshi has joined us. Good morning, Sakshi. What are the numbers at the FI and DI end are telling us?
Very good morning to you, Shail. Well, the US stocks have gained after the minutes of Federal Reserve's July policy meeting have actually indicated that some of the decision maker acknowledged that the need to cut rates is now here. Remember, on Wednesday, S&P 500 and Dow Jones, they ended almost 0.4% and 0.14% higher respectively. The Nasdaq settled about 0.5% higher in trade. Brent crude was just about 0.07% lower at $76 a barrel. Gold rose by about 0.04% to about $25.13 an ounce, and this was the latest data. The markets are now looking for cues of rate cuts from Jerome Powell's speech over the weekend as well at the symposium. And of course, following this, the Asian markets rose and on an overnight after the overnight trading action on the US also indicated that uptake. So the investors in the region are now awaiting Bank of Korea's policy decision. Nikkei was trading higher by about 0.7%. Kospi was also trading higher by about 0.1% as well. We've also seen the Hang Seng up by about 0.5% in the early morning trading action. Shanghai is absolutely flat, while the Gift Nifty was also trading about 0.2% higher, 24,871. So we could be expecting a bump up in the Indian markets. Overseas investors have stayed net sellers, like you asked, Shail, of the Indian equities for the third straight day. FPIs, or the foreign portfolio investors, they've sold stocks worth about 799.9 crores, while domestic institutional investors, they've stayed net buyers for the 13th straight session. They've bought equities worth about 3,098 crore rupees as well. So those are some of the details that we have. Some stocks that I'm going to be keeping an eye out on. Well, we have Procter & Gamble as the fag end of the earnings season that came out with its earnings. We've actually seen the revenue down by about 6% at 284 crore rupees. EBITDA up by 6% at 48 crores. The margins were at 17.01%, and the net profit was down by about 44%. But the rest of the stocks are definitely important as far as the news flows are concerned. So Zomato, Shail, I'm sure you would have talked about it. The company will now acquire Paytm's entertainment ticketing business worth over 2,048 crores, and Paytm will transfer the movie ticketing business to Zomato, which will be also acquired by the company about 1,265 crore rupees. So these will be bought by Zomato. And 197 Communications, we've also seen, has announced now significant cuts in the annual salaries of the non-executive independent directors. So both Zomato and Paytm will be the two first stocks that we will be looking at in today's trading session. Even the brokerage houses reports have come in for both these companies following this news update as of last evening. So we've seen that while on Paytm, CLSA has come out with a rate or target price which they have raised to 530, but they maintain a hold on the stock. It's Citi that has a sell rating on Paytm with a target price of 440. They will be continuing to watch out for key outstanding regulatory bottlenecks to resolve. First, the NPCI green light to new UPI customer acquisition, government FDI approval for payment aggregator license, etc. But for Zomato, we've actually seen some good upgrades really coming in. In fact, we have actually seen the report coming in from Bernstein, which has raised the target prices for Zomato as well. And also there's one more report, I think, from Jefferies that has also increased the target price to over 330 for Zomato as well. So those will be the two brokerage houses reports that we will be watching out for as far as these two stocks are also concerned. Hoodco will be in focus. The company signed an MOU with Yamuna Expressway Industrial Development Authority to extend loan assistance towards projects on both sides of the Yamuna Expressway. We'll focus on that. Office Space Solutions is going to be in focus. The company is expanding its footprint in Bengaluru by unveiling about 66,846 square feet of premium workspace. Trent is going to be in focus. The company is looking to position Star Bazaar, its supermarket and hypermarket chain, as its third growth driver after both Westside and Zudio. These are the reports that are coming in from media. Now the plan, they believe, is to accelerate store additions, drive affordability, and push private labels aggressively under the new head, that's Neville Tata, who has taken up as the executive position position at Trent hypermarket as well, with a 50-50 joint venture between Trent and the UK-based Tesco as well. So that will be important to watch out for. So those are some of the key stocks that you should definitely keep an eye out on. There are going to be several QIP, based stocks also that you need to focus on. A lot of fundraise news that's coming in as well. Apart from this, we are also keeping a keen eye out on RVNL. The company has signed an MOU for rail infrastructure projects in the ASEAN market, with a special focus on establishing a manufacturing base in Malaysia for about railway coaches. So that company will be in focus as far as the railway space is concerned. Then we also have some more stocks that you can keep an eye out on. For instance, like I was saying, there's a lot of fundraise news flow. So Zen Technologies, the company, will be launching its QIP. It has set its floor price at 1685 rupees per share. So that will be in focus as well. Then we also have another stock like Irida. It's going to be in focus. The company is to consider raising of funds by about from the FPO QIP route, 4,500 odd crore rupees and other means as well. So Irida will again come back into focus because of these news flows that are coming in. Alchem Labs is one company you should be keeping a keen eye out on. The promoter of Alchem Laboratories is set to sell about a 0.7% stake, equating to about 8.5 lakh shares. This is via block deals. This is expected today. The floor price for these shares is set at 5,616 rupees, representing a 3% discount to the current market price. So those are some of the stocks that I'm keeping a keen eye out on, Shail, today.
Ladies and gentlemen, we'll also highlight the strength that you are seeing in the Nifty in terms of top gainers and losers over the last 5 sessions. Remember, today is the weekly expiry of the index, and let's focus on top 5 stocks which have given decent returns. Remember, people were talking about pain in the metals space. Which is the top gainer in the Nifty as far as the last 5 sessions are concerned? Hindalco, 8% higher, 685. SBI Life already at a record high, 1800, 6.6% higher. Shriram Finance, 6% higher, 3159. And Divi's Labs, of course, 4900 at 5.765%. These are the gains in the last 5 sessions. And of course, BPCL, as I have mentioned in my early morning commentary, the lower crude oil goes, the better it is for domestic oil marketing companies. 5% higher, 5.6% higher at 351.2. Which are the top losers in the last 5 sessions? M&M, 2.5% lower, 2769. While there was a lot of news that was made at the launch of the 5-door Thar, but nothing much has come in terms of advanced bookings that have been done. Bharti Airtel, remember, it acquired the parent Bharti Enterprises acquired a 24% stake in British Telecom. The counters down 1.3% over the past 5 trading sessions. Tata Motors 1.2%. Lots of news coming in that inventory worth 70,000 crore rupees in unsold cars is stuck across dealerships in India, and that's what is ailing counters such as Tata Motors and Maruti, to say the least. ICICI Bank 1% lower, Tata Consumer 0.5% lower. So these are the 5 relative underperformers. I believe Devan Bhai has joined us. A very good morning to you, Devan sir, and a very warm welcome as always on Market Today. Let's understand your thoughts on the market as of now. Just 1 percentage point away as far as the all-time high is concerned on the Nifty. We've digested and thrown away all the negatives that have been hurled at the markets over the last 15-20 days. That's the problem between SEBI and Hindenburg. That's the problem of unfolding of the yen carry trade and all sorts of mediocre earnings. Now we are looking forward to rate cuts. What do you think is the sentiment in the Lal Street? Where should investors focus on?
Hi, good morning, Shail, and thank you for having me on the show. Well, I think one point appears to be very, very clear to me, that this market is not going to work in one direction. It is going to have a sector rotation, it is going to have continued rotations. And that's what one has seen. On one side, some of the growth, I think, which we had seen earlier in the companies which are in the railways, in the defense, in the public sector, where the P's touch, I think, 60, 70, 80, 90 kind of a ratio. Those P's have actually, I think, started correcting, moderating, and a fall of 25-30% has been seen in many of these counters. So the money is taken out from those counters where the valuations are rich compared to the earning growth, and this is going back into some of the select fundamental stocks which are largely into the front line, which are largely into the index, which are largely into the growth trajectory on a systematic basis. Fortunately, as I have always maintained, I think along that, I think Nifty 50 stocks today still have lot of headroom available, largely because of the fact that the valuations are not expensive compared to their peers in the mid cap and small caps. So to a greater extent, I think the money has started shifting into the quality fundamentals from the momentum, and that's a good sign for the market. Whether in this kind of move, market touches an all-time high, it goes to the next territory. Definitely, everything is distinctly possible. But the best part is that I think the market is giving you the correction in some of the floaty stocks, and that's where probably I think people are earning money, putting money back into the quality fundamentals. So it's a good sign as far as I think the market maturity is concerned.
Very good morning to you, Devinsa. I also wanted to ask you, how are you looking at this new development between Zomato and Paytm last evening, and how Zomato will be taking over the ticketing business of Paytm? Who does it benefit more with this, and how should the retail investors be approaching both these internet-based stocks? On the one hand, we do know that Zomato has consistently been proving the fundamental improvements within the earnings as well, the profitability, growing various aspects. This will be the third addition to its vectors of growth. Paytm, on the other hand, do you think has bottomed out with all the pain points that were existing?
Yeah, good morning, Sakshi. Uh, well, in my understanding, in this particular case, first question of yours, I think it benefits more to Zomato than to Paytm. Paytm is trying to desperately get out of, I think, all the assets where they are not being able to grow them. Having said that, for Zomato, after the success of Blinkit, I guess I think this particular business is the next one to create additional hook as far as I think the retention of the customer is concerned. Every customer wants different kind of services. They started with the food delivery business. They went into 10 minutes delivery through the Blinkit. Now they are getting into the entertainment segment of the business. Again, I think they are touching the wallet of the customer in every aspect I think that they are looking at. So in my viewpoint, strategically, they are going absolutely right. I think there is no questions asked on this subject. What is most important out here is that I think how you are basically going to leverage your existing customer base, the platform that you have. And that's where probably I think the success would be. Blinkit has worked on a narrative of 10 minutes delivery, and I think they have succeeded with it because I think they actually came in help with the households. Now, I think here the wallet is touched upon for the purpose of I think entertainment related spending that every household is doing, and that's where probably I think they will have to set some new narratives. So I would remain relatively more hopeful and optimistic about the possibilities for Zomato vis-a-vis the Paytm. As far as Paytm is concerned, to me, I think they are right now still in the activity of, I think, repairing their balance sheets. Should they continue to get rid of, I think, those businesses where they have been bleeding, probably, I think that will be the first corrective strategy that we will talk about. Whether it will result into incremental revenue, incremental profits, not completely sure. That part, I think, is still far away as far as the results are concerned.
Right. Devin bhai, one of the most critical underperformers in the last 2-3 months has been the metal space. Now, with interest rates possibly coming in from Wall Street and percolating across the board, do you think metals offer an opportunity for domestic investors to come back into select good quality stocks in this space? If that is so, any one or two stocks that you can highlight which you feel are now in the buying zone?
Absolutely, Shail, and I think that's the time to go contra as far as metal is concerned. We have been adding our views that I think metal is best bought when the crude oil prices are down. And that's where I think today you are getting an opportunity. With the energy cost remaining lower, which is their biggest raw material as far as I think the business is concerned for metal commodities, I think this is one point which is going in favor of metal companies, producing companies, that their energy cost is remaining low. On the other side, minus China factor, where I think they are basically, I think right now the metal commodity prices are going down because of the China factor. Minus that factor, I believe that India demand scenario remains absolutely buoyant and convincing, not for 1 or 2 years, but next 8 to 10 years. So, given that kind of a situation, in my understanding, as a directional call, the metal would be probably the best position commodity as far as I think the opportunity is concerned. The rate fall, I think, or cut down in the rate of interest is once again very positive for the infrastructure spending because of the cost of fund, which is coming down to eventually coming down. So that particular aspect also works well. In my understanding, and probably I think couple of companies where we believe that I think the opportunity should be growing and growing big. That may include likes of Hindustan Copper, likes of Vedanta, likes of Tata Steel, for that matter. Where I think this the significant amount of advantage because of the cost and because of the higher amount of I think uptake, which is likely to happen because of the infrastructure spending. And more importantly, the private sector is now participating in spending program. So this is going to add further amount of thrust into the growth for the demand of the metal and commodity. So we continue to remain bullish on the entire pack. In fact, I think one should not try and miss out. I think most of the companies at this point of time. Maybe I'm expecting 20-25% kind of an upside in these counters going forward in next 12 to 15 months.
Devendra, the other new age company that I wanted your attention on is Ola Electric. Just within a week, we've seen the stock double investors' money, those who had invested in the IPO, and probably those early investors of the listing day as well. Uh, Despite this kind of the loss on the books that everybody was first apprehensive of, and therefore probably the listing shot was not there, how are you assessing the stock now vis-a-vis the other auto major players which are already in the EV space, and they are also making heavy strides?
It's a good point to discuss actually. I think nothing fundamental is changed as far as I think the IPO and post IPO is concerned. They in the IPO disclosures, I think whatever the numbers that they reported, they've been losing about 24,000 rupees per vehicle as far as their sales are concerned. And to make good this particular loss, there is only one component which could possibly has to brought down the cost of that component has to down. That is the battery cost. Now, battery cost, the Ola is optimistic about it. That I think soon, once they have got their own manufacturing happening, probably they will be in a position to bring down the cost of the battery. Should that be the situation, then that's the first sign of bringing the company into profits. Whether this is happening in 24, 25, or 25, 26, answer is no. Maybe somewhere in 25, 26, we will get the indication belonging to 26, 27 financial year, wherein I think they will first show the signs of bringing down the cost of battery and in turn, I think make profit out of the vehicle or maybe break even out of the vehicle. As I understand, at 60,000 crore market cap for this company, it is justified when you are making a profit around 9 to 10,000 crores. Currently, that situation is far away. Now, why these stocks are going despite of all this? My understanding is that today there is no pure focus EV OEM in the market. Tata Motors, Bajaj Auto, TVS, each one of them, Mahindra, each one of them has got the EV portfolio, but they are not pure focus EV companies listed in the market. So there is a requirement of this kind of idea into the portfolio, wherein they want to invest, I think, in pure focus EV businesses. That's why mutual funds are basically allocating money. Fortunately, I think they have got a push in form of liquidity right now. And that's the reason for which I think this idea is finding space in the portfolio of mutual fund. And that justifies the rally that had happened post listing. But as I said, I think most of the fundamental aspects are required to be seen along with the reason for including this particular stock into the portfolios.
Okay, I think that's very excellently explained that there is this critical need in the market to invest in a pure EV play, and perhaps Ola fills in that space wonderfully. We'll of course wait for their own battery plant to come up over the next 9-10 months or so, and then probably the picture on the financial side will be cleaner. Let's look at the markets, ladies and gentlemen. We have pre-open rates in front of us. The Nifty is flat as flat can be on its weekly expiry day, 11 points higher, 24,787. Let's look at the index heavyweight space, the top 10 super heavyweight stocks. Let's see what are they doing. Led by the IT index and IT stocks, Infosys 21 rupees higher, 1894. Remember, the rally that is happening on the Nasdaq has its positive impact on domestic IT as well. Let's look at some other stocks. Okay, what is HDFC Bank doing? Again, disappointment, 24 rupees lower, 1602. The heaviest and the highest weighted stock in both the Nifty and the Bank Nifty is at its weakest at the opening level, 22 rupees down. What is Reliance doing? Mildly in the green, 3 rupees 25 higher, reclaiming 3,000 rupees as far as the stock price is concerned. ITC a percentage point higher, 4 rupees up. LNT 19 rupees higher, 36.15. How about ICICI Bank? 1 rupee higher, 11.75. Very quickly, we'll take a detour into what is happening in the daily space as far as the markets are concerned on the Nifty. Okay, let's look at top gainers. Kalyan Jewellers 6.5% higher, 577. There is a block deal expected by one of the major investors in Kalyan today, so keep an eye out on this one. It has been a stunning outperformer over the last 2 years or so. Shyam Metallics, a very strong upgrade coming in from UBS, targeting above 1100 rupees. The counter's up 6.5, 814. Zomato taking it away, 3% higher. Paytm 3.3% higher, 593. So both parties are very happy with this transaction. Paytm, which requires a cash injection, gets 2,000 crores. Zomato acquires an asset which helps expand its online offerings. Happy ways for both of them. Okay, what else is on the move? This is the major stocks that are doing. The Nifty 113 points higher, ladies and gentlemen, 24,882. Now this is getting to be exciting. Remember, it's the weekly expiry of the Nifty. We've rallied 5 days in a row. This would be the 6th. I was hoping for a flat day, but all the beauty of Wall Street now sort of coming back into the counter. ICICI Bank, second heaviest weighted counter on the Nifty, 1.3% higher, up 15. Infosys, ITC, Axis Bank, 0.5% to 1% higher. This is looking good, ladies and gentlemen. Let's look at the broader space within the Nifty. How about top losers? Okay, they're just 6. That means 44:6 is the advanced decline ratio. How about defense? What is defense doing? What is PSUs doing? Okay, Paras Defense 4% higher. They have permission to open a factory around Mumbai. 1285 for you, 4% uptick. How about PSUs? Okay, Ireda fundraising 3% higher, 246. About 4,000 crores worth of funds have to be raised. A board meeting is happening on that one. It's a very nice happy day on the markets, ladies and gentlemen. Everything in terms of positivity working. Hopes for a rate cut on Wall Street. Crude oil prices down to 6-7 month lows. Dollar index weak, metals higher, and of course a nice uptick coming in the markets. Devan bhai, as far as defense is concerned, a lot of profit booking is happening on frontline shipbuilders. How do you see this space? Is this an opportunity to get back into these stocks, or do we wait for better prices to emerge?
So, pertinent point, Shail, and I think 3 to 5 years of order book visibility is already there. So So there is no question of, I think, not looking at this space with the prospect of, I think, investment in next 3 to 5 years. And that's what I think we have been always voicing it out, that whenever you get an opportunity with the corrected price, this is a space I think which you should be belonging to. Now let's look at the fundamental check. On the one side, we have got the order book position, which is absolutely strong, convincing. On the other side, the companies can deliver 15 to 20% of the growth at best. And that's where probably I think the valuations are required to be adjusted. I would be most comfortable buying any of these companies in a price earning ratio of somewhere around 30-35 if they continue to grow at around 20% rate of growth. If they are growing below 20% rate of growth, then accordingly, I think the price earning ratio will have to be adjusted. So I think that's where probably the beauty of the market is. The market is priced to perfection in most of the situations eventually. So I think that particular situation is being played out at this point of time. Correction in the price, I think, startling looking at this kind of companies from long-term prospects. Today, 30% kind of a correction in the price has happened. Maybe I think we'll have to redo check as far as I think their current year prospects and the next year for the growth that they'll be producing. Remember the fact that I think till yesteryears that they have the situation, they have had the situation of a lower base and on which higher growth was getting reflected. Today, the situation is that they have higher base and the growth is getting reflected, but which is moderated. So, from that perspective, the valuation correction is a good sign. I think it's time to look into some of these companies eventually, I think in a gradual manner, and into the portfolio. Remember also the fact that I think some of the loose ends would be ready to ship out of this particular investment. And that's where probably I think they may probably bring down the price more than warranted. That is the time when you should look into this company from investment perspectives.
Right. Devinsa, also wanted your thoughts on the entire banking space. Why do you think are large private banks still struggling despite cheaper valuations? This was the best time for them to now participate, be the front runners, pull up the markets from the long-term consolidation and show up and shine bright. But they have still not managed to do so. What do you think is the pain point there?
Well, their fundamental aspects are absolutely in place. Most of the private sector banks have been growing their AUM book in the vicinity of around 18-20%, and they have a reasonable amount of cushion with the deposit as well. So the fundamentals are not at all distorted in these banks. Of course, I think the non-performing assets remains under control. So all fundamental points are absolutely in place. The real challenge in this market has been that the attention of the traders, stroke fund investors, have been into some of the known narratives like defense, the railways, the capital goods. They've been buying at a fairly fancy valuation those particular companies. Today, they have probably getting realized that okay, now there is a time to put the profit out of these fancy valuations. And that's where I think the rotation is likely to take place. In my understanding, it has already started. So some of the expensive valuations are now being looked at by the funds, and I think the propositions, compelling propositions like banking, corporate banking companies, some of the large NBFC companies, they are now finding favors with the investors. So sooner we will see, I think, the price adjustment completing, and I think some of these banks and NBFC companies getting re-rated in the marketplace, and their price should pick up. That's what I think one can expect hereafter.
Hmm. And the other space which has been in the thick of action is, of course, the oil and gas space. Both the upstream and the downstream companies, even the city gas distributors, have been consistently performing as well. Looking at the current geopolitical scenario and how the crude oil prices are functioning at this point in time, of course, we are going forward into the second half, which is going to be festive season, wedding, but the demand is again under question globally. So there are a lot of dichotomic factors here. How are you really looking at this entire space? What should be an average retail investor's approach to both upstream, downstream, and the city gas distribution? What role should they play in their portfolio right now?
The global geopolitical situation cannot be more worse than what it is today. Only silver lining it would be hereafter, but I think some improvement in this situation, and which is more likely than otherwise. So, given that possibility, according to me, the crude oil prices are going to remain under control. They will remain on the lower side. If the crude oil prices are remaining on the lower side, and if the interest rates are coming down in the global markets, then in such situation, we are going to see the demand revival taking place in most of the geographies. And if this demand revival is taking place, remember well, I think that some of these companies could possibly have the best of the times. Because on one side, you have a lower cost of crude, on the other side, better margin for the derivatives of crude, be it refining, be it petrochemicals, be it specialty chemicals, or whatever. I think each of the areas where probably the margins are going to be better than hereafter. Demand scenario remains extremely convincing to me. Along with the renewables, the conventional energy segment is progressing well at this point of time. So that scenario remains promising. All in all put together, companies into this space, I think, are likely to see themselves re-rated, be it refinery business, be it city gas distribution business, or be it oil exploration gas business. I think that is where probably they are likely to see re-rated. But being a commodity-driven activity, one will have to be a little bit mindful that when the re-rating takes place and when the stock price appreciates, you have to use them as a commodity kind of a trading activity and look profit out of it. Long-term investment remains intact, but I think at a price. So current price definitely suggests some upside into this space.
Ladies and gentlemen, 9:11. The pre-open has settled. Nifty on its weekly expiry day is likely to open with a gap up of 93 points. Strong overseas cues and typically strong Asian markets are prompting this gap up. Remember, this is the fifth day of the rally on weekly expiry. Let us be a little, how should I say, cautious of this gap up. The run up has been now to the tune of 770, 780 points in the last 5 sessions. This has to be carefully watched. We are now just 0.7% from an all time high of 25,074. So let's be a little cautious at these levels. And of course, the bank nifty is trying to open 209 points higher, 50,900. The IT index is settled 164 points higher. So it's a nice uptick that is likely to happen. Let us hope this gap up is sustained, or if it is filled and then the market resumes its uptick. Mr. Palvia joins us. Rajesh Palvia, Head of Technical and Derivatives Research at Axis Securities. Namaskar, Palvia Saab. A very happy belated birthday to you and a very warm welcome. Two stocks that look good in the markets. What would be your return gift to us?
Thank you, Shalji. Thank you for birthday wishes. So, stocks which we like at this juncture, that is from insurance space, HDFC Life, we are focusing. That stock is looking promising for trading point of view. The way stock managed to give breakout, we believe that here there would be continuity of uptrend. So 750 to 760 target we are projecting for HDFC Life. So one can look to buy this stock with stop loss of 705. And another stock that we like is from IT space, that is L&T Technology and Services. That stock also managed to give breakout of previous swing high, and this is the fifth consecutive day where stock is making higher high low formation. So sustained buying is happening in this stock. So we expect LTTS can extend its gain. 5550 to 5600 would be the next target for the stock. So keep stop loss of 5390 to buy LTTS also.
Morning, Rajesh, and belated birthday wishes to you. Hope
Thank
you
you,
had a
Sakshi.
fantastic time. Wanted to ask you, would you bet on Zomato or on Paytm today after that news development yesterday?
So I think both stock, for trading point of view, both stocks are looking attractive. For investment perspective, Zomato would be attractive bet. So for trading point of view, yes, we could see a good up move in Paytm also. The way stock has moved up in last couple of weeks, we believe that here there would be another round of rally in the stock, and 620 would be the next target for the stock. Your stop loss at this juncture should be placed at around 568 to hold long position, or can initiate a fresh long position also. Zomato is also looking promising, and I think the way Zomato has moved up in last couple of weeks, we believe that till stock is holding about 250, 52 level. I think one should remain on the long side of trade, and possible upside we can see towards 285 to 290. But this is something positional trade, not for trading. But Paytm one can look for trading also.
Right, ladies and gentlemen, the markets have opened. There is absolutely no surprise. Zomato, for the moment, is the stock of the hour, 2.6% higher, 266. Paytm shining forth, 3.2% higher at 593. Both of them are in the top traded counters on the NSE 500. And Sakshi, what is really interesting, I'll give you a wonderful data. Of the top 25 stocks in the top traded counters on NSE 500, just two are in the red, and that's PNB and that's HFCL. I wouldn't be bothered at all. Both of them have done phenomenally well. Let's, as usual, shift to our super index heavyweights and see what is propelling this move. Infosys, IT giant, 15 rupees higher, 1888. What is Reliance doing? A rupee 30 higher, almost 299. What is HDFC Bank doing? Thank God, in the green, 6 rupees higher, 1631. ITC 60 paisa higher, Axis Bank 5.10 paisa higher, L&T 8 rupees 35 higher. So it is really good as far as the top 10 index heavyweights are concerned. The Nifty is slipping marginally lower. This is trying to fill the gap on its weekly expiry day that happened early morning. Let's see what happens after this. Top gainers on NSE 500. Taking it away, UBS report, Sham Metallics, 9% higher, 833. Block deal on Kalyan Jewellers expected 5.5% higher, 574. Paytm taking it away, 5% higher. I think this one needs to be checked very quickly. Palvia Saab bouncing from 200-day DMA on a very strong turf. Paytm, what needs to be done?
I think Shalji, yes, one should look for buying in this stock. 620 to 630 is the immediate target where we are expecting for Paytm. The way stock managed to give breakout of its previous consolidation range, and the stock is comfortably holding about to all its important moving averages. So I think 620, 630 would be the next target. I think one should trail now stop loss at around 595 to hold the long position. 590 would be the appropriate stop loss to trail at this juncture.
Please keep an eye out on Paytm. Remember, we've been tracking this counter from 350 rupees onwards and have had a positive outlook. Today's news is also very, very positive for at least Paytm. It gets a float of extra 2,000 crore rupees to look at businesses that have been left after selling its entertainment ticketing business to Zomato. Sakshi, Nifty is now filling the gap. The first support level is at 24,820. Let us see whether that holds or not. Broadly, markets are in absolutely fine shape on Nifty's weekly expiry. 1670 stocks in the green, 320 in the red. We track 19 indices for you. Out of 19, 17 are in the red. It's led by the Nifty IT index and of course the mid caps and the small caps. The advanced decline on NSE 500 is 400 shares in the green, just 100 in the red. 4:1. This is looking good, Sakshi. What are you seeing?
A lot of stocks and a lot of buzz right there. IRIDA is 6% higher in trade today, 253 being seen on IRIDA on the news flows that we've highlighted for our viewers as well. How would you look at IRIDA now? 251. It's been in a consolidation zone for a fairly long time, Rajesh ji. Should one be looking at now?
I think contracting triangle breakout is already done on the daily chart, and after a brief consolidation, stock managed to give breakout on the daily chart. I think now if stocks holds about 247, 246 zone, I think there is a possibility that we may see a extension of this rally towards 265 to 270 also. So with the stop loss of 246, I would advise to buy IRIDA at current level as breakout is already visible on daily chart. So I think there would be follow-up buying action we can see in this stock.
Okay, got it. And two stocks we'll touch base upon on the brokerage houses reactions that we are getting in. One is Indigo, Interglobe Aviation. The stock is zooming higher in trade, and this is after the Jefferies report upgraded Indigo. The target upped to 5,225. A 21% upside is what they see from the current levels. 3% uptick on Interglobe Aviation. Here, what will you expect, Rajesh ji? And the second stock, which is again on brokerage houses radar, is Shyam Metallics. There's a UBS report initiating a buy with a target price of 1200 for the successful foray into new business aluminium and stainless steel products. The stock is zoomed up about 7.5% higher in trade. So Indigo and Shyam Metallics for you.
So for Shyam Metallic, very strong breakout is already taken place in this stock, and I think the way stock has moved up after this opening, and now the stocks continues to hold above 800 mark. I think there would be further more follow-up buying action we can see in Shyam Metallic. So I think one should hold the position with a trailing stop loss of 800 at this juncture. And if we talk about Indigo, again looking at the data setup, we believe that Indigo may correct from the current level as the near term structure. Just a moment.
Sure, absolutely.
Sure. So near term structure is indicating that there would be some supply pressure at a higher level. So 4500 is the immediate supply zone for the stock. So I think if it comes around 4500, that would be the level where one can try to book some profit. Very very strong rally we have already witnessed in this stock. So 4500 is the level where one should try to book some profit, or again we can review around those levels.
Fair point, ladies and gentlemen. 9:21. Let's sort of move a little ahead, deeper into the markets, and see what else is buzzing. The mood is fairly fine in the broader markets. I want to see what defense is doing. Masgao in the green, a percent higher, 45.77. Okay, Garden Reach 0.5% lower, 17.93. And how about Cochin? Cochin Shipbuilders flat at 21.12. Okay, what about rail PSUs? You have RVNL 1.4% higher, IRCON a third of a percent higher, RailTel 0.5% higher. What else is buzzing in the markets in terms of high beta? Let's look at some stocks here. Okay, Royal Orchid Hotels 2.8% higher, 359. Indigo. This is something very exciting. Remember, there has been a brokerage update to the tune of about 5,200 rupees. Counter is at 44.15, 2.7% higher. An absolute monopoly on the growing market of Indian aviation. What are the charts of Indigo telling you, Rajesh ji, on the medium term? This is a low beta counter. We are just looking at long term targets for Indigo. What are the charts telling you?
So trading target is 4500, and for long term, I think if it manages to cross over 4500, 4550 zone, then there would be a higher target further. We can see towards 4800 to 4900 also on the longer term perspective. Since last 8-10 week, stock is consolidating in range only. The range is on the downside 4250 and on the higher side 4500. So I think we are waiting for this 4500 breakout to happen, and if it happens, then I think really can extend to 4800 also.
Okay, the one stock that's been sharply higher in trade is Transport Corporation of India. Let's look at the stock. It's higher in double digits. The company has said that they want to mull share buyback, and the meeting would be held on August 24th. And the stock is now up 15%, 1196 for TCI. What sense do you get after looking at the charts of TCI right now, Rajesh ji?
So overall long-term structure is bullish, and again today we have seen a very strong gap up opening, and I think the way stock is now trading comfortably above 1150 level. I think if it's hold 1150, then I think this really can extend also. 1250 to 1300 would be the next target for the stock. So overall structure is bullish. Any minor dip should be used as a buying opportunity. At this juncture, we would suggest to keep stop loss of 1150 to hold long position.
Okay, got it. Let's pay attention to the FNO space. Yes, Shail, please.
Yeah. Continue, Sakshi. No issues. Please continue.
So just wanted to highlight, the fertilizer space is also coming back. Even yesterday, some of the stocks were higher in trade. In the FNO space, Deepak Nitrite is up by about 4.7% in trade today. Yesterday, we had seen Chambal was up in trade. Even fact, a lot of these stocks were higher in trade. Even Deepak Nitrite is higher by about 4.5% in trade today. So how are you looking at this entire space right now? Rajesh ji, fact is higher by about 5% again in trade today at 999.6. Interesting number. We could be looking at that 1000 mark now. Your sense on these stocks?
I think whole space is showing good traction at this moment, and I think the way most of the stocks manages to give breakout on their near-term structure, I think there would be furthermore continuity of uptrend in most of the fertilizer stocks. I think Chambal very strong breakout is taking place on weekly chart. The stock managed to give breakout on the falling trend line on the weekly chart, and after a brief consolidation of almost 4-5 weeks, now stock broke out those consolidation range. So we can see good traction in Chambal also. Possible target we can see towards 555 to 560. So I think Chambal is buy with stop loss of 526. Even Deepak Nitrite, as you pointed out, again, stock is now approaching to its previous swing high. The way stock has opened in today's session, I think short covering action would be there in this stock, and then possible target for Deepak Nitrite we can see towards 3150 to 3200 also. So I think one can look to buy this stock also with stop loss of 3030. Fact, after a corrective move of 3-4, mild correction was there in the stock after a correction of 3-4 weeks. Again, stock is resuming its uptrend, and the way stock is holding the ground at long-term chart, I think there is a possibility that we may see a good up move in the stock towards 1100 to 1150 also. So I think buy on dip should be your strategy. In fact, at this juncture also very strong setup across all time frame. Your stop loss to hold long position should be around 965.
Sakshi, I think we need to mark Kalyan Jewellers. This is now buzzing very, very strongly. We have 586.30 on the charts. Your view here, Rajesh ji, all-time high was 634. This was on July 24th. What are the charts of Kalyan telling you? Very, very high volumes. In fact, let me just give you the volume picture. This is the second most active traded counter on NSE 500 and 408 crores. Rajesh ji.
I think we have witnessed strong buying action in most of the jewelry related stocks. So Kalyan Jeweler is our preferred choice as stock is holding the ground on the across all time frame on the bullish side. The way stock is holding above 550 zone, I think there is a high possibility we may see a good traction towards a new all-time high trajectory also for the stock. Possible target on a positional perspective, we can see towards 660 to 680. For trader, the target is around 620. At this level, for trading point of view, your stop loss should be placed at around 575. But for positional perspective, you can hold the position with stop loss of 550. 670, 680 would be the next target. Even Titan can be looked at current level. Here also there is a breakout. So I think Titan may also exhibit a good amount of rally towards 3650 to 3700. So Titan can be also buy with stop loss of 3530.
Sakshi, one interesting data that is coming in from the NSE 500 list is that amongst the top 10 traded counters by volume, the Nifty stock is just one, and that is on the 9th position, HDFC Bank, just 142 crores. It's just cash counters that have sort of taken up the entire sentiment space and doing phenomenally well. So Zomato, Kalyan Jewellers, Sham Metallics, I am purposely not asking because this is news led, Mazgaon Dock, Paytm, PNB Housing, RVNL, Indigo, Nykaa, all of them in a nice good deep shade of green, showing heavy volumes, and people just staying away from index heavyweights and maybe indices. The Nifty meanwhile has almost filled that gap that it started with. Yesterday's close was 24,782 and today's low is 24,798. So 24,800 is being tested. Let's wait for the first 15-20 minutes to lapse, and then we'll take a view on the Nifty from Rajesh ji on weekly expiry day. Sakshi, what are you watching?
Some more buyback based news which is pulling up some stocks like Aarti Drugs. Let's pull up that stock. That's up by about 8.5%. Again, the company is going to be mulling buyback. Remember, we discussed TCI also on the same news flow, and now Aarti Drugs is something that's been 7.5% uptick can be seen on this one. Anything that strikes your attention with the charts of Aarti Drugs, Rajesh ji?
So, Sakshi, after this gap up opening, stock is now negotiating with its multiple supply zone, which is almost at around 560 zone. So, I think intraday gap up is already above that 560 zone. So, if we continues to hold above 560, so there would be a high possibility that stock may attempt to move further higher to 600 to 620 kind of zone. So at this juncture, our advice would be keep your stop loss around 560 to hold long position if you are already holding it. And the possible target 600, 620 would be there.
Okay. Viewers, autos, pharmas and the realty stocks, they've actually slipped into the red now. We had opened with all the sectors up into the green. Some profits being shaved off of autos, realty and pharma right now. Consumer durables index is the top moving sector right now with about 0.8% increase. Of course, two of the biggest factors there are Kalyan Jewellers, as both Shail and Rajesh have pointed out, and also Titan right there. Apart from this, Blue Star, Crompton, V-Guard, Whirlpool, these are the stocks that continue to buzz within the consumer durable space. FMCG is also now picking up pace as well. You can see a 0.7% of an uptake led by the kind of moves that we are seeing on Tata Consumer Products today. 1.4% of an uptick that can be seen on the index right now. From the consumer durables and the FMCG space, what looks good to you, Rajesh ji?
I think from FMCG, ITC would be our preferred choice. The way stock is holding above 500 level, I think there is a possibility that this stock may exhibit good amount of rally towards 540, 550 on a positional perspective. So I think from FMCG, one can look to buy this stock. Very strong, chart structure across all time frame. And the way stock has moved up in last couple of weeks, I think there is a possibility that again stock may have a new all-time high trajectory for towards 540, 550 is a positional target. Keep your stop loss around 490. From consumer durable, I think one can focus at Voltas. That stock is also looking very promising, and the way stock has moved up in last couple of months, I think there is a possibility that stock may continue furthermore in this all-time high trajectory, and possible target for Voltas we can see towards 1800 kind of level. So I think one can look to buy this stock also with stop loss of 1640.
Yes, I think the stock that needs to be highlighted is IREDA. Very strong chart structure now coming in. If you remember, about 2-3 weeks ago, there was this report that saw a potential 56% downside 1 month ago. This was from Phillips Capital. The stock did correct fairly sharply. The all-time high, as I was pointing out, was 310, went all the way down to about 240, and today's the mood. A very strong breakout coming in on charts, and this is backed by fairly decent volumes on IREDA. Remember, within the PSU pack, IREDA is the top gainer, and that itself shows that the mojo is back on the counter, 7% higher at 256. Sakshi's already pointed out the fertilizer stocks, they are doing very well. Indigo in a phenomenal run up, and of course let's now mark the all-time highs that have come into the market as far as the first 15-20 minutes of trade is concerned. Okay. Uh, Names such as Sham Metallics 814. From the pharma space, we see Eris Life Sciences 1239, 2.2% higher. You have a strong move coming into Alchem Laboratories 5790, and of course you have the likes of HPCL now moving into an all-time high territory, although a bit of profit booking. Rajesh ji, oil marketing companies, crude oil prices at 6-month lows. What are OMCs telling you? Is this a time to enter, or has the time lapsed?
No, I think Shalji, one can enter at current market price also. The way most of the stocks from oil marketing companies have done, very decent run up we have already witnessed. But still, the way long-term charts are, placed for BPCL, HPCL, we believe that furthermore buying interest would be there as overall near-term, short-term structure is also bullish. On the derivative data, long built-up is already there in both the stocks. So I think BPCL we can see target towards 370 to 380 on a positional perspective. So I think one can buy and accumulate this stock with stop loss of 345. So BPCL is all looking promising. Even IOC is also trying to recover from its recent corrective move, and the way stock is now trading above it's a 20-day, 50-day moving average. I think if it's a hold above 171 level, there is a possibility that IFC may also attempt to give some pullback towards 178 to 180 kind of zone. So here also one can deploy some long trade with a very small stop loss of 171. HPCL also in an uptrend. Here also we can see good rally towards 430 to 440 kind of zone. So HPCL also can be looked at to buy at current level also. In minor dip also one can add with stop loss of 390.
Okay, let's focus on the banks now. The Nifty bank is higher by about 0.6%. Private banks, PSUs, even the financial services, all three constituents are supporting. Within the top movers on the Nifty, State Bank of India has pulled up in trade at 821.7% of an uptick can be seen here. But within the banking space, Rajesh ji, what looks promising to you? Are you looking at more private banks to really take the baton right now, or is it with the PSU banks even now?
So Sakshi, we are focusing on both the space. From PSU Bank, our preferred choice at this juncture is Bank of Baroda.
Okay.
Stock has managed to give breakout of its falling trend line on a daily chart, and stock is holding above that breakout level. Even in previous day, there was a long built up, and the way stock has shown some reversal, and stock is comfortably holding about to near term moving average. We believe that Bank of Baroda may show good traction towards 265 to 270 on a positional perspective. So our view is bullish for Bank of Baroda. One can buy with stop loss of 250. Even from private bank, I think one can focus on ICICI Bank also. Though there was some corrective move in last couple of days, but from lower level, stock has formed a bottom at around 1150, 1160 kind of zone, and some recovery is now taking place in this stock. I think ICICI Bank may, attempt to give breakout of its falling trend line, which is placed at around 1185 to 1195 zone. If that breakout happens above 1195, I think we can see a good traction in ICICI Bank towards 1220 to 1240. So our focus is to buy ICICI Bank at current level also with stop loss of 1155.
Okay, so that's the view coming on the entire banking space. It's Grasim that's pulling up 2.5% higher in trade. Rajesh ji is the top mover right now. How are you looking at the charts of Grasim? Is anything else also looking interesting within the cement pack as well?
So Grasim, very strong buying action is taking place. This is the third consecutive day where we are seeing that stock is making higher high-low formation. That clearly shows that sustained buying is taking place in this stock. So I think yes, one can hold on the long position in Grasim. The way stock has moved up about 2730 kind of level. So I think there would be another round of buying action we can see in near-term perspective. 2800 is the immediate target where we are focusing for Grasim. with the stop loss of 2725. And I think some of the stocks from cement space like JK Cement can be looked at current level. Here also, a stock is now negotiating with its previous swing high. I think if any breakout above 43.20, 43.30 happens in this stock, I think here also we can see good rally towards 4400 to 44.20 kind of level in JK Cement. So one can keep this stock also in radar. 43.25 is your breakout level. If that happens, then one can initiate long with stop loss of 4290.
Ladies and gentlemen, let's now shift our focus to where there is very strong volume breakout, and that is accompanied by a rise in price. So let's look at the volume buzzing segment. 7% higher on Sham Metallics. 43 lakh shares have been traded. This is 3.2 times the uptick in terms of 5-day average. Remember, UBS has come out with a research report giving a target in excess of 1100 rupees for a stock which is now at 818. Kalyan Jewellers, already 3x volume done, 1 crore 8 lakh shares have been traded. 7.5% is the uptick. We've marked fact 4% higher, 994. Already 150% of 5-day volume has been done. So these are the stocks that are looking good in terms of gains. I want to see what Ola Electric is doing. Yes. Now comes the profit booking phase. 4% lower, 4.7% lower, 131. Remember, a stunning listing at 78 rupees versus an offer price of 76. Two back-to-back 20% circuits, one 10% circuit. The stock has doubled, and now some profit booking is being seen on the counter. What else is in strength in terms of good quality stocks that we track, which is the deep value segment? Okay. Let me just highlight some names. Lakshmi Chemicals 5% higher, 286. Varroc Engineering 3.6% higher, 555. Paytm we've discussed, 2.7% higher, 589. Polyplex 1.2% higher at about 1306. So these are the stocks doing very well, and I think taking it away is TVS Motors. This is one of those stocks that fell off our radar, but Rajesh ji has a very strong command on TVS Motors. He's been highlighting this stock for the last 3-4 years, if I remember correctly. Okay, now this is at the record high, which I seem to have missed completely. 2665. Is this momentum worth chasing, Rajesh ji?
Shalji, it's a wealth creator stock in last 7-8 years. The way stock has moved up, if you analyze on the longer term chart, any minor dip is attracting the buying interest in this stock, and the way stock is holding the ground across all time frame, I think there would be furthermore continuity of uptrend we can see in the stock. So I think it's a portfolio stocks. One should use any volatility in market to add this stock in a staggered manner whenever you get opportunity in any lower prices. I think the way stock has moved up in last couple of years, I think there is a possibility that we may see target towards 3000 kind of level also in this stock in coming months. So for trading point of view, 2740, 2760 is the target with stop loss of 2620. But for a long term perspective, our target is around 3000. And if you want to keep some stop loss for the if you're buying for long term perspective, I think 2400 or 2350 would be your stop loss.
Okay, Rajesh ji, since you were mentioning these jewelry stocks which are on your radar, are you also keeping some gold financing names also on your radar? Today, it's Manappuram Finance that's buzzing within the FNO space. It's up by about 4%. Cash also market, it's up by about almost 3% higher in trade. These stocks have been, away from the eyesight from recent times. But there was a time when all of these stocks were buzzing sharply higher. A lot of consolidation has taken place. Anything that looks positive here?
So I think Mannapuram, yes, it's already breakout is already there on daily chart, and after breakout, this is the second day where we are seeing follow buying action is taking place, falling trend line breakout. So I think there is a possibility 230, 240 would be the next target for Mannapuram. So I think here one can buy with stop loss of 211, possible target 230, 240.
Okay, the other space that we haven't touched base upon is the power space that I wanted to discuss with you. IEX is up by about 2% in trade today at about 198.9. Then yesterday it was SJVN that was buzzing sharply higher. Today I think there's some block deals and Genus Power is up by about 5% higher in trade as well. SW Solar has been consistently performing. Within this energy basket, power space especially, CESC is also up in trade, again in trade today. It's been consistently buzzing 2% higher. How are you really navigating through these moves? Any stocks that look most promising on the charts within the power space?
So I think two stocks, CSC and IEX, these two stocks are looking promising at this juncture. And the way both stocks have managed to give breakout of their previous swing high, I think we can see good rally in this both the stocks. CSC, we are projecting target towards 220, 230 with stop loss of 180. And for IEX, though stock is slow mover in nature, so I think those who have patience to hold it for positional perspective, they can deploy some long trade even in minor correction also you can add it. The way stock has managed to give breakout of its previous consolidation, I think till stock is now holding above 190 level, I think there is a possibility that stock may continue furthermore upside to 210 to 220 kind of level. So with stop loss of 190, IEX is a buy for target of 220.
Okay, ladies and gentlemen, 9:46. We have 14 minutes to wrap up this space. What is looking good? State Bank of India and ICICI Bank. The best person to comment on banks is with us. Rajesh, your views on SBI at 815 and Nestle at, my apologies, ICICI Bank at 1174.
So I think Shelji, yes, ICICI Bank is buy at current level. Stock has already completed its corrective move. The way stock has shown a recovery from its recent swing low, I think 1150 is the your stop. 1155 is your stop loss to buy ICICI Bank. Stock is now negotiating with its falling trend line on a daily chart. Stock was in falling channel. I think there is a high possibility that ICICI Bank may attempt to give breakout of 1185. And if that happens, then possible target towards 1220 to 1240 we can see near term perspective. SBI already given a breakout on daily chart. So I think here also we can see a follow-up buying action. 835 to 840 would be the next target. But from PSU banking basket, I think our choice at this juncture on a technical perspective, that is Bank of Baroda. And we believe that 265 to 270 would be the positional target for Bank of Baroda. So we are bullish for Bank of Baroda with stop loss of 250.
One stock that I want to mark, we've not talked about this one's strength, ladies and gentlemen, is emphasis.
Yeah.
In the enthusiasm towards TCS, Infosys, HCL Tech, and Wipro in the large cap space, and the limelight that Birlasoft, KPIT, and Coforge hold in the mid cap space. What gets missed is quality outperformers and quality stocks. A record high on emphasis 1301. Is this something to be chased, Rajesh ji, or what are the long term charts of emphasis telling you?
So I think whole IT space is looking good, Shalji. Though some profit taking at higher level, but still the way IT index is trading near to its all-time high trajectory, we believe that we may see a good rally in IT stocks in next couple of weeks, and possibly yes, from large cap IT, TCS is our preferred choice. TCS and Infosys both are our preferred choice from the large cap IT. And from mid-cap IT, as you pointed out, yes, emphasis. is also looking very promising. The very strong breakout is already done on the stock. The stock managed to give breakout of its previous swing high. So I think the way emphasis has managed to give breakout of a 3050 level, I think if that levels holds, then possible target 3250 to 3300 would be there. But another stock from midcap IT that we are focusing, and we have already recommended that stock to our client, and we have added in our managed account portfolio, that is LTTS. That stock is also looking promising, and we are expecting target towards 5700 to 5800 for L&T Technology Services. Here also there is a breakout of previous swing high, and one can deploy some long trade in this stock with stop loss of 4350.
Okay.
Fair point. One more stock from the recently listed space I would like to mark is called Office, AWFIS, Office Space Solutions. It's an amazing chart. Stock got listed somewhere like 400 rupees in the month of June, and Rajesh ji will really appreciate this. On the weekly chart, Rajesh ji, not a single candle is in the green, so it's in the red. A higher high and a higher low on a weekly basis as far as office is concerned. I think they've announced the opening of a new facility in Bangalore to the tune of I think more than 60,000 square feet, and the counter really appreciating 8%. While it is at a record high, I normally sort of avoid getting lured into these, but this is something that I wanted to bring to the attention of our viewers. A very strong breakout based on news, and the stock has doubled from its May 2024 listing. Let me just check out the office IPO price for our viewers. It got listed at 400 rupees. Okay, what was the issue price of office? Just a moment please. 383 rupees, ladies and gentlemen, from 383 to 870 today. Sakshi, yours.
Right. The mid cap 100 index has moved up about 0.5% higher in trade right now, and the small caps are also nearly about 0.5% higher in trade as well. So far in the small cap 100 index, we've actually seen from the recent lows, about a 1,000 point rally also coming into the fore. Rajesh ji, broader markets, what looks good to you? Remember, we were discussing the fertilizer space. Fact has moved up 7% high. It's the top moving mid cap stock today. There are a lot of interesting names as well. Apart from that, we've discussed many of those already, but several of those, Jubilant Foodworks is now up and about. You have Nykaa, that's up 2.2%. PI Industries is moving up. Bandhan Bank is also now moving up along with all of these stocks. What looks good to you within the mid and the small cap space, Rajesh ji?
So Sakshi, yes, fertilizer is one space, and another space where one can focus at this juncture, that is based on sector behavior. That is sugar space is also looking
Yeah.
promising. I think here also we can see a good rally in coming days. So most of the sugar stocks have shown good traction in terms of buying in last couple of days, and near-term charts has already shown a breakout in most of the stocks. So I think Praj industry one can look at here. We can see a good traction even from small ticket size Bajaj Hindustan. That stock has also given a breakout of long consolidation and holding very well above that breakout level. So I think above 40, there is a possibility that Bajaj Hindustan may also show good traction towards 46 to 48 kind of zone. Even from that space, Triveni Engineering is also looking promising. So I think sugar is one space where one can focus at this juncture. And some of the chemical stocks are also showing buying interest. So I think one can focus on those stocks also. Excel Industry, I think I have recommended this stock earlier also. That stock is also looking very promising. And the way stock has moved up over 1500, I think there is a possibility of 1650 to 1700 kind of target in Excel Industry also. So here also one can deploy some long trade. in this stock. Even from uh, power space, Inox Wind, that stocks can be looked at on their on radar. That stock is also looking very promising. The way stock is holding about 215 kind of level, I think here also we can see good traction towards 240 to 250 kind of zone. So that stock also can be looked at from that mid cap, small cap space.
Okay, got it. Another space we haven't touched base upon is the railway space with you, Rajesh ji. Within the railway space, are you getting any conviction on any of the stocks or the charts right now? IRCTC is showing us about a half odd % of a move. RVNL has been consistently moving up as well. But what looks good to you within the entire space?
So I think those who are looking for stocks for some positional perspective or for investment perspective, they can deploy some trade, some long position in railway stocks at this juncture. But for trading perspective, I think one should avoid at this juncture at least, because after a correction, some recovery is taking place. But I think for near-term structure, still we are waiting for some more pullback action, because most of the stocks are now slid below to their 20-day, 50-day moving average. So near-term strength is still absent. But for long-term investment perspective, yes, these declines are to be used as a buying opportunity. I think RVNL, IRCON, both stocks are available at attractive level. So one can deploy some, investment or some partial staggered buying can be done in IRCON with stop loss of 245. And I think once stock crosses about 280, there would be resumption of rally in this stock. Some recovery is taking place in IRCTC also. Stock is also in process of forming a bottom. Stock has taken the support from its previous swing low of June 2024. I think 900 is the immediate level to keep as a stop loss, and if stocks crosses above 960, I think there would be a chances that stock may exhibit good amount of rally towards 1000 to 1020 kind of level also, but it may take time, because these all stocks are under recovery mode, but maybe in near term structure it may time to recover. So those who are really looking for some positional trades or investment, they can deploy some long position in these stocks.
Ladies and gentlemen, 9:57 is upon us. Let's just start wrapping the show. It's the weekly expiry of the Nifty. It opened about 95 points gap up, given the strong cues that came in from both Wall Street and Asian markets, as also specific commodities such as crude oil. And then because it's rallied for 5 successive sessions, a bit of a profit booking has come in, although the Nifty is still in the green at 2900. The battle today is at 24,800 as far as the markets are concerned. The today's high was 21,870. So not only profit booking, but some how should I say, put writing would have also, put selling would have also happened from those levels. What else is moving within the Nifty that needs to be brought to your attention? There has been a very nice move on the IT index as far as markets are concerned. Amongst the top 10 index heavyweights, HDFC Bank is 7 rupees higher. State Bank of India is 4 rupees higher. So today's move on the Nifty is supported by banks. ICICI Bank is 5.4 rupees higher. The index banking Nifty itself is 232 points higher at about 50,921. It's the fertilizer space that has taken it away. Stocks such as FACT, NFL, RCF, and the agrochemical space in the private sector, such as UPL, such as Punjab Chemicals, such as Bharat Rasayan, all of them have done extremely well. 9:59, Sakshi, what are you looking at?
So thankfully we're back up above 24,800. So we are not leaving that thing as of yet is what I believe is the takeaway right now in the morning 1 hour of trade. 40 points higher in trade on the Nifty even now. We'll see how it pans out even though the trade is getting more volatile, and three indices are actually lying low. Autos, pharma in the realty space, but consumer durables, private PSU banks, they are now going to be taking the baton now, and you can also see broader market supporting the indices. Top movers right now: Grasim, Tata Consumer, Bharti Airtel, Asian Paints, LTI, Mindtree, Tata Steel, while the top losers on the Nifty are Dr. Reddy's, Power Grid, Tata Motors, Cipla, NTPC and M&M right now. F&O movers: Manapuram Finance, Interglobe Aviation, Deepak Nitride, Bandhan Bank, Chambal Fertilizers. These remain the top movers right there. On the downside, you have stocks like Mahanagar Gas, Power Grid, Dr. Reddy's again, and then you have Gujarat Gas and Oberoi Realty as some of those top drags right now. We're wrapping up the markets and the show right now. Thank you so much, Rajesh, for being with us on this very special edition, sharing all your thoughts, ideas and strategies on the markets and also the stock ideas. And here's wishing you once again belated happy birthday, and hope you have a fantastic year ahead filled with a lot of great health and wealth that you continue to build for yourself, for your family and for your clients as well. Thank you so much. And with that, viewers, thanks from both Shail and me right now on this show, but we'll be back with several other shows during the course of the day, so stay tuned. Lots of action-packed day ahead for you.
Prime Minister Narendra Modi promises a developed India by 2047 and aims to make India the third largest economy in his third term. The third edition of Adani Business Today India at 100 charts the course.
This is clearly India's golden moment.
A future-ready India, decoding the mega trends of Mission 2047. The biggest names in business, the top policy makers. Discuss what it will take to fulfill the Viksit Bharat dream. Join Adani